This is Maria Abreu. Welcome to my channel. If you haven't already, please subscribe. And if you enjoy the content of the videos, remember to hit like and share. Hello, folks. This is Maria Abreu. Welcome to my channel. And here we are addressing questions posted by subscribers. This last one is very interesting. The question is very long, so I'm just going to go ahead and paraphrase it. This is a person that applied for a pensionado visa or a visa as a pensioner. He was approved. Okay. Now, December and January, he's supposed to purchase property or make the final payment on a property, which means, as we've discussed in a couple of videos back, that the transfer of the process to transfer the title has to initiate. Okay, upon making the final payment. His question is whether the tax exemption that the state provides to pensioners will be able to come into effect based on his visa, meaning the visa issued by the consulate, or if he has to actually be a resident, have residency through the investment department as a pensioner to take advantage of this incentive. The answer is the second. The visa allows for you to interpose an application as a pensioner with the investment department. But in order to take advantage of the incentives that that form of residency provides, you have to actually be a resident, meaning the process must have concluded and you have to have a residency card and cedula in your possession. But here's a little piece of interesting information few people know, and I'm going to share it with you. Little secret, industry secret. So you have 6 months. People who purchase property have 6 months to pay the transfer tax on the title they're looking to transfer into their name before it starts to accrue penalties. Because if 6 months out, you haven't paid the taxes on that property, you're going to have to pay it plus some penalties, and the penalties accrue daily. So if you are coming in with a visa, my suggestion is that you put in that application for residency with the investment department ASAP, because you may not get it within 45 days with all of the delays going on, but even if it's 3 or 4 months, you still have your residency and you're still within the 6 months allowed by the government to pay the transfer tax on that property. Okay? So you might just get away with it. The only problem is that in order for you to take advantage of that incentive, a process has to be interposed with Hacienda, which is a state department, okay, that allows, it works in conjunction with the Internal Revenue, the Dominican Internal Revenue Service, and that process can take a while. So even though you may get the residency before the 6 months, it's all a matter of how quickly Hacienda will issue the certification that exempts you from the taxes that you have to present at the Internal Revenue Service. So it's tricky. It's tricky. What I would say is you have nothing to lose. Put in the application for the residency under the fast track. And if you see that time goes by and the residency is not ready, then unfortunately, you're going to have to pay the transfer tax. But if you see that within 2 or 3 months you get that residency status, then immediately, a request could be put in with Hacienda, for that tax exemption. And once you get that certification, then that goes into the registry office. I tried to explain that as simply as I can, and I'm sorry if it didn't come out that way, but there are things that they're easier to do because it's what we do. So explaining it sometimes is more challenging than actually doing it. But contact us and we'll explain it in detail if this video wasn't clear enough. Okay, guys? Thanks for watching and see you next time.